Another 10% drop. Hi, it's Charlie giving you Wednesday's video, and I hope you're very well. And what I'm talking about here is the S&P. If we just go, I've got a monthly chart up here. If we take those lows of March 2020, and if I can expand it up here to the highs of the beginning, the first week of this year, roughly, you can see that a 38% retracement, I haven't quite put that on accurately, but a 38% retracement would see us at around about 3,800 on the S&P. That's about 400 points lower than where we currently are at 3,800. Still looks like a fairly reasonable pullback when you put it into context of the moves that we've had over the last 2 years, that it still looks like just a reasonable pullback even to 3,800, although that would put the S&P, I think off the top of my head, into bear market territory. It would see it through 20% overall, but it's about a 10% fall from where we currently are. So I'm not saying that obviously that's a guaranteed that it comes down there, and we may still bounce again yet. We've had a couple of months, February and March, which bounced quite nicely, came down, then bounced again. It's unlikely going to happen here, considering we've only got 2 more trading days until the end of the month. But I think it's worthwhile at least being conscious of that potential for that retracement. So let's actually go and have a look here and see what the daily time frames are looking like. So we can see that the S&P has come right way into this support zone, really, which we can see that has stalled price previously in February and March, before price has had bounces. So it is into that zone there. If I can just now delete my drawing there we go. So it is into that zone, and we can see we're having a bit of a bounce here today. However, unless the S&P can get back above my key moving averages here, my 50-day moving average, which is up at around about 4,400 or so, but it needs to get above that and trading above that. So it's got a bit of work to do here. Preferably up above 4,500 realistically. It needs to go before the intermediate term, so the shorter daily time frame, is starting to look a lot more positive if it can do that. Otherwise, the pressure is building to the downside. So yes, nice bounce day so far today. I'm recording this mid-afternoon, so who knows what happens yet, because we have been seeing these sell-offs coming into the evening session for the US. But the overall pressure, even if it bounces some more in the short term, the pressure, moving averages are coming down on top of the 20 moving average will be crossing down through the 50, and the general price action, the general pressure is to the downside. So yes, we've come down into these lows here, but I liken this to like a pebble skimming across the top of a pond. So what very often happens, you throw the pebble, it bounces off the top of the pond, and then gradually it loses that inertia until it plops through. And we've got that potential here at the moment where prices come down, it's bounced again and bouncing again, and are we going to see a breakdown? So I think if we do break down through this zone down here, then of course there's going to be other areas where the S&P may want to bounce from, but you've got to be very conscious of that bigger picture, that a 38% retracement just off the last 2-year bull run would, and it's merely a 38% retracement, would see the S&P down at 3,800 area, which is 400 points lower than where we currently are. So, but we're seeing volatility, we're seeing movements all over the place at the moment. We've got the euro down at fresh lows. If we can get the euro up here. So if I look at the monthly chart of the euro has got down. Talking of lows from 2020, that's the euro's low from March 2020, and today we've breached it and gone lower so far. And so this is a monthly chart here, so it's a big old monthly candle now. And as you can see, you put it into context, it's the largest monthly bar that we've seen since whenever that was here in 2020. So we've breached that. And so all eyes are now on these lows from the beginning of 2017. However, from a sentiment perspective, and I will do a video at the weekend on sentiment. From a sentiment perspective, especially this year, the sentiment towards the dollar is getting very, very frothy, and I'll talk all about that on Saturday's video. And so I'm not trying to predict a massive reversal. I'm not trying to predict that because that's always tough to predict that type of thing. But certainly, as price has come down, it's come down to these 2020 lows very often, and yes, it's breached them, but very often you will get some form of bounce after price comes to a prior low. It's not a guarantee. This is quite a big down bar here for this month. We might just get a very soft bounce before coming down for those 2017 lows, but all eyes are on those 2017 lows here for the euro dollar. Definitely one to watch out for. So we've got movements going on galore. I could pick any currency pair, but for example, if I went to the pound dollar, now in relative terms, the pound dollar is way higher, way off of its lows from 2020. So it's still got a long way to travel if it's going to go there. However, look at this. If we look at this monthly chart here, look at this beautiful old trend line that one of our members alerted to me just earlier this week. Lovely old trend line here. Well, I think it was last week actually. And what the pound dollar's done is it's breached it and it's come back down to and it's testing it as I speak. So it's come back down. So again, if I can get the my zoom back. So the pound dollar is retesting an old trend line. It's got a horizontal support line here, which is breached a bit, but still around it. So there's some fascinating markets going on at the moment. We've got markets like the pound dollar here, like the euro dollar, which are coming into some levels of potential technical support. But at the same time, I can then go to something like the New Zealand dollar on the monthly chart, and it's only just beginning to break. Look at this candle here. So huge moves going on, exciting stuff, and we're trying to navigate our ways through all of this in the trading room. There's been some interesting, quite nice little trades going through this, coming through this week, and of course we'll be looking for the next opportunities as we go forward from there. But anyway, the one thing that I have to say, because when you see overall movements like this, whether it's in the stock markets like the S&P, the Dow, NASDAQ, currency markets, cryptos, whatever, is make sure you're trading safely. So always don't, as exciting as it all is when there's all this sorts of movement, then do respect your risk management and your trading plan. So because you could respect your risk management, but then go and trade 100 times in a day because you get overexcited. So do please be responsible with your trading as well, because there's always that potential to get a bit overexcited during these times. Anyway, I'll be back on this sentiment backdrop this weekend.